Hi, I'm Pedro Palandrani, Head of Product Research and Development at Global X ETFs, and Taking Stock starts now.
Counting down to the close. Today is Friday, March 27th, and you are watching Taking Stock. I'm Ashley Mastronardi. I see red across the board. Markets still reacting to the uncertainty in the Middle East. Joining me now is the Einstein of Wall Street, the man who knows it all, Pete Tuchman. Pete,
I know it all.
The Dow is in correction territory, down more than 800 points today.
Yeah.
What does that mean?
Well, the Dow is not the most significant index of all, but all the other indexes are down. We saw the Nasdaq and the S&P and the Russell also. So mid cap. So all of them are broken down. There are no levels now that we haven't broken today. I mean, this is definitely a concern. It's a Friday. When you close the market at the low of the day on a Friday, very often you'll see capitulation happen, a gap down on Monday. We did bounce off that super low. We were down over 120 something handles on the S&P a few moments ago, so there's a little bottom feeding. People are trying to close out the day with a little bit, trying to just scoop a little stuff. I mean, at this point that we've broken through all levels, there is no support here at all in this market. So you know what? I mean, it is all about the war. It is all about oil. It is all about uncertainty. I wish I could say something more positive, but that's where we are. Correction mode across the board is a fact.
All right, thank you, Pete Tuchman, Einstein of Wall Street.
Bye, guys.
For joining us. It is now
We're
time
good.
for the bell. Presidio doing the honors at the podium. They are celebrating their recent IPO. They went public on March 5th here at the New York Stock Exchange. We're going to talk to them later in the show. Let's take a look at the board. The S&P down more than 1.5%. The Dow down 1.75% in correction territory. The New York Stock Exchange Composite down almost 1%, and the Russell down 1.75%. I'm bringing in Michael Reinking. He is the senior market strategist at the New York Stock Exchange. Michael, what is your takeaway from today, right across the board?
Yeah, Ashley, thanks for having me. Look, I mean, it was a rough day, and that's not terribly surprising heading into a weekend. We continue to be kind of mired in the fog of war, right? And so, kind of heading into the weekend, investors do tend to kind of be a little risk averse. As kind of Pete pointed out, we've been breaking some pretty key kind of technical levels over the last week, and you're starting to see from the market perspective, kind of the jawboning that's coming from the administration is not necessarily helping to kind of calm markets. And as we've talked about in the recent days when I've been on with you, that as the longer this kind of carries on, right, the bigger the potential range of outcomes and the risks associated with kind of higher interest rates and higher oil prices.
And I understand during times of geopolitical uncertainty, we see a lot of volatility, and then the markets even out. We're past week 4 of this. When do you think we'll see that evening out, if at all?
Yeah, so look, I think this is the 5th consecutive week of declines for the S&P 500, right? We've seen about a 9% decline from the all-time high. And the last time we've seen kind of 5 consecutive weeks of declines was back in 2022, right? If you look at sort of some of the technical measures like RSI, which is relative strength, we're starting to get into kind of short-term oversold conditions. We just moved under 30 today, and we're starting to see kind of the range on the days starting to expand, right? So that does suggest that we could be getting closer to a little bit of a technical bounce, right? But I think the real key after that is how markets react to some of those broken technical levels that we were talking about, right? So around 65.50, which was the October and November lows from last year, and then just over 6,600, which is where you have the declining 20-day moving average and the 200-day moving average.
ICE Brent crude was over $110 a barrel. Why are markets so reactive to oil prices? And do you think today's result is a result of the volatile and choppy oil prices?
Yeah, I mean, look, everything kind of does feedback in this situation to kind of oil prices, and oil prices, right, are not only impacting kind of the prices at pump, but it ultimately feeds in to other products as well, things like kind of plastics and then kind of the cost of transportation, right? So that does potentially have this inflationary kind of impact, which is kind of something that central banks are kind of are going to have to struggle with kind of as we move forward. And we're starting to see markets not only respond to the move higher in oil prices recently, but they're also becoming much more sensitive to the move higher in interest rates, right? So you have the kind of the 2-year yield is right around kind of 4% again. The 10 years around 4.5%, right? So we are kind of pressing up against kind of recent highs.
What will need to happen for the oil choppiness and volatility to stop?
Yeah, so look, I mean, the longer this goes on, right, the higher the potential for kind of oil prices to really start to dislocate. But if you think about where we were in 2022, you had ICE Brent was closer to 150, right? So right now things have actually kind of, all things considered, remain kind of pretty contained. In order to kind of really see some real relief here, you have to see kind of the Strait of Hormuz kind of reopen, right? We continue to hear the administration kind of talk about negotiations, right? But until that is going to be kind of a difficult process. It's going to be a difficult process kind of to reopen the strait without kind of Iran kind of coming to some sort of an agreement with Iran, which could potentially kind of entail putting boots on the ground, and that's like another whole escalation to this process, right? But that is kind of really the key. And then we also have to kind of pay attention to see kind of if the Red Sea, if those kind of those shipping lanes start to close, that would be kind of another whole escalation.
All right, Michael Ranking, Senior Market Strategist at the New York Stock Exchange. Thank you so much for joining us. Josh, you can take his mic. We're going to take a walk to the NYSE notables. We just heard Presidio ring the opening bell. And guess what? We're in the throes of the NCAA tournament. The Sweet 16 played last night. By this weekend, they will be down to 8. And by the end of the weekend, they'll be down to the Final 4. And Polymarket thinks that Arizona, 27% of people think Arizona is going to take it, 21% favor Michigan, 17% favor Duke, and 13% favor Illinois. We're going to have to see what happens. But first, we are going to take a look at our NYSE notables. The first one is Argan Incorporated. It is up. This is unbelievable. 37, almost 38% on earnings. The company posted $3.47 a share, crushing its estimate of $1.98 on stronger than expected revenue. Argon are key builders of gas-fired plants needed to support AI data centers. The company closed the year with a record $2.9 billion backlog, giving it a balance sheet with zero debt. And next up is ETR. Entergy, this is at 6.82% on striking a major deal with Meta on a Louisiana data center build out. The agreement delivers a $2.6 billion in customer savings, with Meta covering the full cost of the new energy infrastructure. Protecting existing ratepayers, Entergy is also planning new investments in generation, transmission, and renewables, positioning itself for long-term growth as the AI build-out accelerates. So next up, we have a package earlier today. Lead anchor for FinTech, Remy Blair, sat down with John D'Agostino of Coinbase Institutional to discuss the resilience of the UAE business environment. Take a listen.
Welcome back to Market Movers, the opening bell. Well, the Middle East is navigating a complex geopolitical landscape right now, but institutional capital flows suggest a high degree of resilience. Now, the UAE and specifically Abu Dhabi continues to position itself not just as open for business, but as a rapidly expanding hub for global wealth and digital assets. John D'Agostino, head of strategy for Coinbase Institutional and board member of AIMA, joins me now to talk about Coinbase's continued commitment to the region. John, great to have you here. Thank you so much for joining me.
Thank you for having me, Rem.
Well, we continue to monitor the situation in the Middle East, and we all know that geopolitical tensions do remain. So how is Coinbase maintaining their presence in the region?
Well, look, first of all, my heart goes out to everybody in the UAE and all the Gulf states that are under attack. It's a horrible situation. I think even though one life lost is too many, it's extraordinary how they've managed to limit the casualties and injuries, and I think that's testament to what I've seen over the last 25 years of traveling there, how they treat their citizens and their visitors. So to any of the viewers out there who are going through this, our thoughts are with you. So Coinbase obviously very famously made the largest acquisition in crypto history, probably a little over a year ago, with Deribit, which is headquartered in the UAE and Dubai. We remain committed to that business. That business is growing, not shrinking. We also have an active application for registration in Abu Dhabi under the DFSA. So the UAE has in 25 years, I've watched the UAE build a global financial center in less time it takes most countries to build a bridge. And that's not an exaggeration. So what they've done in crypto and outside of crypto has been truly extraordinary. So there's three primary regulators, VARA, FSRA, and DFSA. The sort of friendly competition between those regulators catapulted them into being a global crypto center during a period of time when in the US and Europe, the administrations and regulatory regimes were going in exactly the opposite direction. So I think even though that's shifted, there's a tremendous amount of institutional loyalty to a region that set the gold standard for thoughtful, tech-forward digital asset legislation. That doesn't go away in a few months or even a few years. So I think the commitment is there from us. The commitment is there from the industry writ large because they earned it.
Yeah, and John, you have personally been in the financial space for many decades. And as you highlighted, we know that markets go through cycles. So, given what we saw in 2025 in terms of ADGM's commitment and what's happening on the ground right now, give us an idea of the implications, the impact moving forward.
So look, for ADGM and DFSA, they've got a strategic advantage in being they have a wonderful slogan, the capital of capitals. But it's not just capital in the form when we hear that, we think sovereign wealth funds, and that's true. They're mostly located in Abu Dhabi, but they have incredibly strong banking sector. And so Bank FAB, for example, not just being the largest bank in the UAE with presence here in the US down in DC, they launched a stablecoin, a dirham-backed stablecoin. The dirham is backed by the dollar, so indirectly, the largest bank in the UAE has launched a US dollar-backed stablecoin. If you consider the role of US dollar-backed stablecoins in ensuring US dollar dominance, that is a further indication of the tremendous relationship that the US has with the UAE. They are our strongest ally in the Middle East. So that banking sector is not going away. The trillions of dollars of sovereign wealth fund capital is not going away. As I mentioned before, the people who have moved, particularly since COVID, I noticed something very, very similar, interesting. Again, 25-year history there. As the place has grown in prominence, I usually get the phone call when somebody wants to move there. So I've done hundreds of those phone calls over the years. And I noticed something very interesting post-COVID. The people who were calling me and saying that they were moving there could live and work anywhere in the world. These are individuals who could easily get a top job at any major financial institution. And so the quality and sophistication of that senior leadership at the asset management firms, at the exchanges, at financial service firms, the banks, the sovereign wealth funds themselves, has never been higher. Those people aren't leaving. So when the dust finally settles, they have capital, they have banking, they have core infrastructure. Anyone who's lived there sees how efficient the systems are. And they have some of the top talent in the world that is committed to the region. So that's how you not just survive, but thrive. That's why they dig out of these holes when they happen periodically.
Yeah, and you continue to highlight the importance of relationships. And I understand that you spent a lot of time there, so therefore you know a lot of people on the ground there. So what are you hearing from them right now, John?
Kind of shocking resilience. To be honest, and these are personal phone calls. They are very grateful for a very similar story to what I heard during COVID. They're extremely grateful for the efficiency with which the whole process is being run, the way the government's looking after them. UAE is extraordinary. I was there when that big flood hit. All the videos were floating around. People called me and said, "Are you okay? Is everything all right?" I said, "Yeah, I had a 6-hour delay where I was stuck in the Emirates Lounge, where the worst thing that happened to me was they ran out of smoked salmon. So if that flood would have happened in New York, you'd have a 2-week dig out. I was on a flight 6 hours later. I understand Emirates is launching full service again on March 29th. So Godspeed to that effort. So they understand that the place runs really, really well. A lot of people who move to that part of the world move there for a very specific reason. They want to rebuild, they want to build something extraordinary, and they want the thoughtful regulatory environment with which to do so. Those people are not abandoning that dream because of this, just like they didn't abandon it during the bankruptcy, et cetera, et cetera. So the folks that I know who've made serious commitments to the region, they're worried, they're scared. There's no question. Well, I won't sugarcoat that, but they appreciate the effort the government's placing on their safety, and they're not thinking about abandoning the UAE.
Well, John, I appreciate your time today, and thank you so much for sharing your perspective when it comes to what's happening on the ground in the UAE.
Thank you, Remy.
Thank you very much.
Welcome back to Taking Stock. Joining us now is Dirk Wallinger, CEO of York Space Systems, which just went public in January here at the New York Stock Exchange in a $630 million IPO. I remember that day. The company is positioning itself as a new kind of defense prime focused on building satellite constellations at speed and scale. Dirk, welcome to Taking Stock.
Yeah, thank you for having me. I appreciate it. And yeah, I remember that day very well too.
Yes, I remember seeing you up there on the podium. What makes York Space Systems different from traditional aerospace players?
Yeah, what York is doing is really disrupting the traditional kind of play and approach to aerospace. What we're doing is we're able to execute at significantly lower schedules, much faster to delivery at half the cost. And so this company was always built around breaking up the multi-billion-dollar satellites that took decades and proliferating them. And so we build lots of satellites with similar capabilities, but in the hundreds and thousands.
What are the capabilities of the satellites you're building?
Yeah, today with the more advanced chips and the acceleration of production and supply chain in the US, what you're able to do is, kind of much like your iPhone, where it used to be a very large camera and a complicated camera to get a good picture. Now you're able to break that up into, hundreds and thousands of different pictures that are amalgamated together to make a better picture. And that's kind of what you're doing with satellites. So instead of one gigantic satellite that kind of does everything, you're able to break up that capability into lots of different satellites that are smaller that can accomplish the same mission. And that could be communications, that can be Earth observation, synthetic aperture radar, and then a lot of the secure communications needs that we need in places like Iran and in Ukraine that we're seeing today.
And I understand you have a backlog. What does that tell us about demand right now?
Yeah, really, we have a really strong backlog across a multitude of customers and capabilities for the United States. The challenge now is just that there's no argument that the people are going to need lots of more satellites and lots more capability. What we need to do is the government and commercial needs to issue out the funds to be able to deploy this stuff quickly. And the government is getting very serious about that now. We're starting to see lots of movement on issuing contracts so that we can get these supply chains rolling and get assets fielded. It's not the kind of supply chain that fires up in 1 month. It takes a while to do that. Companies like York and SpaceX and other companies like that are well positioned to take advantage of that.
And can you tell us about your $187 million deal, and what is proliferated space and why is it going mainstream?
Yeah, so we're really excited. We recently signed a new commercial contract for a 20-plus constellation. This is the first of many constellations for this customer. And the exciting thing is it's real commercial demand for space capabilities. So it's a really exciting opportunity for us. We'll be deploying that quickly. Proliferation, what it really means is, when the United States was the only country really deploying satellites in space at scale, we were the only ones up there. And so what that meant was these platforms got very exquisite and very, very large. The challenge with that is that now the US is in a contested environment with lots of other countries and adversaries like China and Russia, et cetera. And really what happens is these large, very exquisite platforms in space become targets. And what you could do is you can take down a $10 billion asset, with a $2 million missile. And so by proliferating the systems and doing them in hundreds and thousands, makes it so that you can't fully take down the capability. You might be able to deter some of the capability. You might be able to take down a few, but you can't take it all down at once. And so that's why we see this movement from national defense, but then also from commercial companies moving to proliferation.
All right, Dirk Wallinger, CEO of York Space Systems, thank you so much for joining us on Taking Stock. We're going to go to break.
Thank you.
We will see you in a few minutes. Welcome back to Taking Stock. I'm joined now by Will Ulrich, chairman, co-founder, and co-CEO of Presidio, fresh off of ringing the closing bell. And we were together on 3/5 when your
Just
company
a few weeks ago.
IPO'd.
Yes.
How does it feel to be back to celebrate the IPO officially?
It feels great. We're glad to be back. We brought 70 people from Fort Worth with us. 18 of our Presidio children came, which is an unbelievable feeling to share this experience, not just with our executives, but also with our families.
And the next generation.
And the next generation, yeah.
All right, so tell me, what is Presidio doing? You're in oil and gas.
Yes.
How are you different?
Yeah, this isn't your mom and pop's oil and gas company. This is a totally different take on the oil and gas industry. We don't drill oil and gas wells. We go and produce cash flow from existing wells. We use technology and AI to enhance that cash flow, and we generate dividends for our investors. And we pay out, at this point, about a 13% yield on our stock.
What are the use cases for the AI in this process?
Yeah, it's really interesting, and I know a lot of people talk about AI, but we're pretty advanced here, and we have pretty concrete cases. We have a target in our company to increase production 3 to 5% this year, which is a big deal, without spending capital and solely using AI to do it. So I'll give you an example. We have built out our own systems, we've run our own data, and one of the things that we found was that as we look at our days of production, Mondays were always a down day, and that was a trend we had never seen before, but we were able to identify it through AI. And that's guys returning to work after the weekend, and they're not necessarily sure where they need to go produce the most out of their wells, and these are our guys in the field. Thursdays were our highest day. And so what we've done is we've created a system that will flag for those guys on Monday morning which wells they need to go to specifically in order to make sure that Thursday's not the high day, but they put that production right back online on Monday morning.
How unique is this model, and how big do you think it could get?
This is the only publicly traded company that's doing this. For a long time, we were the only private company doing it, and now we've had some followers, and now as we go public, I assume or suspect there will be some followers as well into the space. But for us, There's an enormous white space. We have a current backlog of about $10 to $15 billion of acquisition opportunities. And so having access to this capital here as a public business is going to differentiate us to be able to go and acquire those assets where we can acquire them at really high returns. So we're investing our capital at 20% plus rates of returns.
What is next for Presidio?
We're going to continue to grow the business, and we've 10x the business once before as a private company, and now at a new listing, I feel like we're back at the beginning, and we want to 10x the business again. So we're at about $115 million of EBITDA, and our goal is to get to $1 billion of EBITDA within the next few years.
All right, well, Ulrich from Presidio, congratulations
Thank you
on
so much.
ringing the bell, and we'll talk to you soon. We are going to go to break, and we will have more when we come back.
Welcome back. I am Scarlett Sieber with Money 2020, and this is how fintech companies actually make money, where we peel back the curtain on the biggest players in financial innovation. Today's deep dive is going to be Kraken, one of the crypto's oldest exchanges and the only one that still feels like it could survive an asteroid hit. Before we dive in, breaking news, Kraken co-CEO Arjun is taking the stage at Money 2020 Europe this June, joining our headliners to talk about the future of digital assets and crypto's institutional era. And let me tell you, crypto is in that institutional era, my friends. Kraken is one of the largest standing crypto exchanges, offering spot trading, staking, futures, custodies, and institutional services. So how does Kraken actually make money? First, trading fees from spot and future activity. Second, staking revenue, shared yield from staked assets. Third, margin and derivative fees. Fourth, institutional and custody services. And fifth, fiat and crypto on-off ramp fees, which is a growing line as regulations mature. So what is their mode exactly? For Kraken, it's all about trust. Kraken has never lost customer funds and has some of the most conservative compliance cultures in all of crypto, an institutional grade advantage in a volatile sector. So that is how Kraken actually makes that money, by monetizing every move traders make, from buying Bitcoin to staking it for yield. With that, it is back over to you.
That's going to do it for Taking Stock. Let's take one more look at the boards before we close the show. The Dow down 1 3/4% in correction territory, down almost 800 points today. The New York Stock Exchange Composite down almost 1%. The Russell 2000 down 1 3/4%, and the S&P 500 down over 1.5%. Markets, of course, still reacting to the uncertainty in the Middle East. You can check NYSE live out Monday morning. I will be hosting, counting you down to the opening bell. That's going to be it for Taking Stock.